Hi, it's Darren Bowden, back again for another catch up with Matt on Crux. I'm the CEO of Metals Exploration, and we're an AIM-listed gold producer in the Philippines. We've currently acquired a few new assets in the last year or so, including Condor Gold out of Nicaragua, and I'd love to speak to you all about it.
Darren, good to see you. So it is time for an update because there's a lot happening with you. And what I want to sort of get an update on specifically is around the kind of integration of the Condor Gold project, because therein lies the future. But it might be worth laying out for people sort of understanding of where you're at today, where the money for all of this has come from, and what your plans are for 2025.
Yeah, so last year was a great year for us. We drew down all the debt that the company had, so we were debt-free. We're currently still in that position, 96 million free cash flow last year, all-in sustaining costs of about 1,100, and that includes our corporate overhead, so that's not just project level, that's everything. So, we're really, even at the moment, we're doing about 10 million free cash a month. And that is the impetus, that is our vehicle for funding our new projects. We're not looking at financing, we're not looking at taking on any more debt in the near term. We're really looking at the build and growth of our company through that cash flow that's coming off our existing operations.
Obviously that cash gives you, I guess, optionality in terms of growth, but also it's a nice defense mechanism in a market like this, which is useful to understand, because Runruno, you're looking at a kind of maybe mine closure in 2027. Is that still the case, or are you looking to try and extend that?
Look, at this stage, that's definitely the case for the existing ore body. We do have a near mine target in another tenement that's very close called Dupax. I've mentioned it before. It's a different style ore body. It's a VMS, so the chances are it could be quite large. It is super high grade. It is a copper, gold, zinc deposit, and the numbers are quite encouraging. But there's work to do there to bring that online after Nicaragua.
Right, and we'll come back to Dupax in a second. I want to kind of get onto this all-in sustaining cost, because the money is the kind of the rarefied air, I like to call it. There's not many companies with access to cash, affordable cash, and certainly not free cash flow. So if we look at this ASIC number of yours, as you kind of move towards that 2027 deadline for Runruno, do you expect to be able to maintain those sort of costs? And will there be any sort of closure costs that you're going to have to fork out?
Yep, that's a very good question. The majority of our closure costs actually built into our numbers up to the end of 2026. The largest one is the finalisation of the infrastructure around the tailings facility, the residual storage impoundment facility. That will be finalised by mid-2026, and beyond there, the total closure costs, given we already do progressive rehab through all of our mine site, is somewhere around $4 million. So very small number in the 200 plus million we should be generating in the next 2 years as free cash. So we've got a nice pool, nice treasury. We're building that treasury over the next 2 years. The cost to sustain and close the existing operation is small, and we should have cash on the back end of constructing Nicaragua as well, which is targeted to finish somewhere around Q4 2026.
Right, okay, and just finishing off on that one, in terms of, this minutiae of detail is really, really important, because as you're moving towards that kind of closure, it's easy to kind of avert your eyes over to the future. So things like ore grade declines and so forth, that's all been factored into everything you just said to me. There's correct. No extraneous. Right. Okay. Okay.
And we understand the deposit very, very well. We understand the numbers it generates. We're running down operations at the same time we're running down the last of the ore. The operation is very well managed. We've got a very mature team there now. We know what we're doing, and those numbers will stack up. There's no doubt about that.
Right. So, and then back onto Dupax. I'm very keen to get over to Nicaragua, believe me, but I just wanted to close everything off here. On Dupax, what's the expected timeline to move from sort of exploration through to permitting and feasibility studies and eventual mining, and what is the opportunity in front of you there potentially?
So the benefit of Dupax, it's a little like Nicaragua, but it's a little less mature. The benefit is we should be able to still maintain and generate a change to the existing infrastructure, update a new mine with cash flow on the back of Nicaragua, i.e. using Nicaraguan cash flow then to reinvest back in the Philippines. That is the target. What we're looking at is we should have, we've already done a lot of groundwork, ground truthing, mapping, geophysics starts in the next 4 weeks, and hopefully drilling will start within the next 6 weeks. That's our target. By the end of this year, we're looking to have a PEA, and we don't really need to go much beyond a feasibility of that level. Why? Because we're using an existing plant. We'll be just changing existing infrastructure. The mine itself is an open cut, so there's not a lot of underground costs associated. So startup cost is just moving existing equipment across, starting up. I really like Dupax for the simple reason it's so close to all of our existing infrastructure, and we can move very quickly to a startup scenario there on the back of Nicaragua.
Right, so that's on the economic studies. What about actually the kind of quick win here, which is like putting out a number, maiden resource? Given what you know, and given how you've mined in the past, do you need to put out a big number day one, or have you got the opportunity of putting out a maiden resource and then sort of building on that over time?
Exactly. We're looking at anything between 8 and 10 million as a maiden resource. Not even to the reserve level will be sufficient for us to know we've got to go. Now, we've got a 10-kilometre strike. We've already mapped the vein at over 1 kilometre, and 9 kilometres away found the same vein as well. So we see the extent of it. Does it have the volume we're looking for? We know it's there. It is at surface. It's easy drilling because it's at surface. So I think we can turn this around very quickly. I think by the end of this year, we should be able to have a maiden resource in hand that we can, put our hands on our heart saying, economic, let's move forward.
Right. Okay. Well, to that point, in terms of trying to understand whether or not it's got viable ore feed or not, what's left in the kind of the process to make make that decision, and two, if it's a negative, what are the plans for the Runruno infrastructure post 2027 then? So
the Runruno infrastructure will be looking at still transforming that somewhere else, but would have to pick it up and take it. Now we do have a couple of other opportunities for that. At this stage, we haven't solidified those. We are talking. But at this, so the easy win is Dupax, okay? And within the next 6 months, we should be able to be putting out RNSs saying the numbers stack up. We've got enough drilling to give us that confidence that the ore body's big enough, and it's not going to be grade related. We're talking, some of the numbers here are significant. It will increase and upgrade the revenue stream from Runruno without a problem. It's really, will it have size? And that's the only question we've got. And VMSs come in 2 sizes, very small or very large. We're hoping it's the opposite. We're hoping it's a large size.
Right, and so therein, I guess, lies the question with regards to, if that is the case, what are your plans for the Philippines moving forward? Obviously, it's where you've been, it's where you've been successful, and you're looking at extending your operations there. Are there other opportunities, or do you say, what, let's get this done, get the cash, and let's move everything over to Nicaragua? How are you going to play it?
No, look, I think our really long-term growth opportunities are Philippines. We've got sizable tenements. We've got at least 3 large copper, gold, and copper ore bodies within our tenement structures that we know of already. And we will start putting out some RNSs around, further RNSs around those. But, they're the 5 to 10 year plan. Nicaragua's the 2-year plan, and Dupax is the 3 to 5 year plan. We have a stage organic growth within our business right now. Where we've got cash, we've got a treasury, and we've got a growth plan. We're in a very, very strong position. And while as I said, M&A is something that we will keep looking at on the side, but it's absolutely not an essential for us as a business to grow. We have enough internal resources and internal targets to grow our business over the next 10 years to and I think first time we ever interviewed, I said, I want us to be $1 billion business. We will be $1 billion business on the back of even just Nicaragua and Dupax, see if it stands the test of time, let alone the other opportunities.
Okay, well, let's just sticking with kind of economic side of the conversation. Let's bounce over to Nicaragua and India, and I want to talk specifically around the kind of capital expenditure funding strategy. Initial capex, it's a low capex project, and you kind of got this kind of free cash flow coming out of Runruno, which really helps in terms of how you actually fund the kind of the capex and opex of this thing moving forward, because your equity is covered. How do you look at that right now? Because you don't want to make things too tight for yourself. Have you access to capital? You feeling confident around that side of things?
Look, I am feeling very confident around the capital, and there's a single reason for that. We just signed at National Relief last week the purchase of a second-hand plant. The whole front end of that second-hand plant matches the front end of our plant. And that is, that's 60% of the cost is in all the milling circuit, the crushing, conveying circuits. Really, all we've got to add are some tanks for CIL, because the back end of the plant, the elution, the smelting, the laboratories, all come with this plant. So and we got that for $10 million. So we've got a $60 million plant. We've got the majority of it for 10. We've got a $2.5 million logistics schedule to get it to Nicaragua. Engineering is being signed up as we speak. We've already got the engineering in hand. We actually got all the as-built from the old plant, so we're able to integrate those into the new plant. And really, it's adding a CIL circuit to what we already have.
Right, so you're not going to need any kind of strategic to come along and help you get this thing going then, are you?
No, we've already got our own team. Our project management team is coming on board over the next 3 months. Our management team, the operations management team, have already started. The GM and the country manager. The PM starts in 2 months' time, and we've already looked at the structure of the org chart. We've agreed it, and we're sourcing and filling it as we speak. We are running, not walking, to make this thing not just hit the ground when we're guaranteeing it's going to hit the ground, but hopefully to bring it in earlier.
Right, okay. And if we look at, in fact, it might be worth you reminding us of the kind of ROI and PPE projections from the 2022 BFS. I mean, what your expectations are there? And quite frankly, have you kind of changed any of the assumptions around ore grade, recovery rate, gold price, operating costs, etc.?
I won't say we threw the BFS out the window, but the BFS didn't quite take into account the opportunity that existed within Nicaragua. And why is that? Because as a junior with an exploration junior that was trying to get financing, the only thing they could use in a bankable is reserves. And it had to be proven and probable reserves. As a company generating cash flow, we can look at the larger opportunity that actually exists, and we can take into account what they did in their PEA, which is an underground, open cut, combined opportunity running in parallel, increasing volume through the plant and overall ounces produced. So the BFS was targeting 850,000 ounce a year, 850,000 tonne a year plant. We're targeting a 1.4 million tonne a year plant. That's what we bought. That's what we're designing to. And we will bring 3 open cuts on, not one at the start. We'll bring an underground on in year 1 and another underground on in year 3. We are going to maintain a 1.4 million schedule for at least 10, if not 14 years with existing resources, let alone extensions that we know exist in Nicaragua. I very much always like the property. I do like the structure where you've got the lower risk open cut combined with a marginally higher risk but higher grade underground, and I think that brings together an overall value proposition which is significantly beyond the BFS. If we look at a 2,800 gold price at a 1.4 million tonne a year plant, you're looking at 145,000 ounces a year. You're talking $1 billion valuation. All-in sustaining costs are actually less than current Runruno costs. So, we'll be doing more than 50%. We're currently doing 80,000 ounces. We'll be upgrading that to 140, 145 at the same all-in sustaining cost. We are going to have cash, and we'll probably actually start paying dividends 2028 once we look at the transformation of the Runruno plant. As soon as that can happen and we have 2 operating mines, then we're really in a box seat to move forward.
Right, and in terms of like signaling, I know you just explained it to us, but in terms of like documenting that, signaling that to market so people don't keep looking back at this 2022 BFS, when do you think you're going to do that?
Yeah, look, we're putting the structure together right now. Once the engineering is underway, Our economic models are being updated as we speak. We'll wrap that into a presentation format. We're not going to go and waste $2 million producing a BFS we don't need. It's not going to happen. We've got the cash. We're going to spend the money putting rubber to the road, starting construction, turning dirt, getting our first, we're breaking ground ceremony is the first week of May. We have the concrete contractor and concrete plants turning up in June. We have the plant arriving in August. We are running, not walking. And by the end of this year, we should be 50 to 60% complete. Now, I'd much rather be working on that than spending money on engineers producing a document so I can sell to market. Now, I'll sell to market the results that we will achieve, and market can see those results firsthand. We will be putting out some statements. We will be putting out our own economic models, but we won't be going out to third parties for that.
Okay, interesting. Okay, first principles. Let's talk about the people you brought on board and their ability to kind of operate in country. Obviously, Nicaragua is a country not many know much about. So, and given its history of political, regulatory sort of uncertainty, how are they kind of integrating? How are they engaging specifically around mitigation, around permitting delays, or any other kind of regulatory risks that you're looking to?
Yeah, it's a very good question. I think the one thing I do see in Nicaragua right now, there is an impetus for the current government to look at foreign direct investment. They're driving foreign direct investment through gold. We're going to be the fourth operator in country. That's international operator. So it's not new to them now, which is good. It has some maturity behind it. And some are quite large scale and are larger than what we're going to be as a producer. We have the country manager who's come on board. He's an ex-attaché to the Canadian embassies, speaks 3 languages. He's been in Nicaragua before. We have contacts in Nicaragua, not just through him, but through the previous management and the country manager, the in-country country manager as well. The whole of my team that is coming in are all either Latin American or fluent Spanish-speaking expatriates as well. We are driving an integrated, culturally accepting and understanding team because we've all worked in South America for a long, long time, or we're actually we're from that local district as well. Now, does that mitigate completely government risk? No. But you take on government risk in all developing countries. And that government risk is something that is managed through relationships. It's managed through doing the right thing by communities. It's having that community engagement, that community behind you. So grassroots are supporting you all the way up through that food chain. And we've got a very good strategy and structure at a community level that was set up by the previous management. I do appreciate the work that they did in that space. We are extending on that, but there's a good basis there for us to maintain and manage that growth strategy and those relationships that we need to make sure we can operate successfully in Nicaragua.
Okay, and just with regards to that engagement as well, obviously the social aspect and is important, locally, federally, so forth. But when it comes to the kind of tax stability and royalty environment and that, I guess that kind of foreign direct investment security component. You've mentioned some of the aspects of what it's going to be like for you and how the government is trying to engage, and there is new mining coming through. But I mean, how do you kind of maintain a sort of some kind of finger on the pulse there, and how you manage that? Is there part of the team that's specifically directed at that in what is a kind of fairly nascent mining environment for foreign companies?
Yeah, absolutely. There is like I said, it's actually the VP Sustainability. He spends a lot of time in country. The country manager. We've got actually our largest team is that team. As we speak, they're the people who are on the ground at the moment doing that work. So, can you negate every risk that you find within foreign countries? No. Whether you're in Australia or you're in Nicaragua or you're in Africa, you're always going to come up against risks that you need to manage as you go forward. We've got a pretty strong contract. The contract that's been signed is pretty strong. All the land that's in country, we own freehold. And is in our name. So we don't have land risk. We don't have contract risk. Everybody has to work with the government risks that exist. But at this stage, I actually don't see the risk in the existing government. If there was in the future, the stability we see there is actually very good. But if there was a change to that government, it's that power vacuum that could cause the instability. We don't see that happening in the next 3 to 5 years. We're not seeing anything like that. But, you never know going forward what may or may not happen in any of these countries. And we've got to all be cognizant of those type of changes. It's more the creation of a power vacuum from stability versus the stability that currently exists.
Right. Okay. And look, I know you kind of explained with regards to the kind of infrastructure readiness and construction risks, etc., around the processing plant and relocating it and joining things up there. But in terms of on the ground, or specifically under the ground, are there any kind of issues that you're looking out for? I don't know whether it be, refractory or deleterious elements or complex mineralogy around the metallurgy. I mean, how are you managing that?
No, we're lucky. It is a very clean ore body. It's a simple gold leaching process. There's no refractory. We're not dealing with what we've dealt with here in the Philippines. It's not a high sulfide ore body. It's very low sulfide. It has a P75, which is the P75 micron, 75% passing, 80% passing 75 micron. It has a recovery rate of 91%, just through simple leaching. So it is a very simple circuit, not like what we're dealing with here. The benefit we've got is our metallurgy and our metallurgical team is super strong. The work we've done here in the Philippines and the intellectual property we've built in-house rather than going out to consultants and getting them to do it gives us some leverage over how we're actually, all of the process design, all the process design criteria for Nicaragua, we're done in-house. Why? Because we've got the team to do it. I'd like to build on those skills in a core team rather than having consultants tell me how to do it. And we've done that, and we've got that core team, which is the one that's driving the process design for Nicaragua.
Right. Okay. And when I look at, you said, right, we've reinterpreted the BFS, right, and we think this is a $1 billion company in its own right. What's the kind of future growth potential, and what are you doing to try and understand it in terms of? I think it's been stated that there's a sort of 5 million ounce district potential here, right? Which sounds good, but you got to actually get after that, and you got to prove that up. How much? What's the process for you as a mine builder and a producer? Say, right, let's get this thing going, and then we'll kind of at some point we'll get into this exploration expansion part of the narrative. How do you time that, phase that, and how much do you allocate to it?
Yeah, look, we're starting that immediately, by the way.
Okay.
We're out with drilling contractors as we speak, and we've got a 50,000 meter program that is starting. Well, we're just confirming with government all the licensing for each of the areas we want to start. But how we do that is we start with extensions to the existing underground. So the main ore body inland near the open cut's well defined. Okay, we don't need to do exploration there, but we do need to do definition extension drilling on that as we seek to grow those undergrounds. Now, those underground extensions will add ounces as we go. We've got at least 2 key targets for that. If not, and there's a number of other areas where we will be growing the open cut as well. So we have a 50,000 meter program that is starting up as soon as possible, and we will be having that extension and trying to grow that resource. Now, we've got an obligation of the CVR holders alone to do that, but internally that is a key metric for us to build on, a key KPI for my team.
So these are extensions. We're not looking for new discoveries from satellite deposits elsewhere. So is there a sense of, if I spend, for every 10,000 meters of drilling I do, I would expect to find, add X number of ounces to our resource? What does the ore body look like, and how can you gain confidence as you continue to drill?
Yeah, they're very true. Look, because you've got, say, Lendia South, the underground. It's all inferred, but it has holes that are over 100 to 100 to 200 meters space. We know that it extends. Okay, it's drilling in between there and then going deeper because it's actually getting higher grade as it goes deeper. So we know the metrics and the shape of what we need to do to drill. Now, the other thing that has always been done in country, which we're changing, is it's always been done with core. So everybody's done, single, double core exploration holes. We're going to start, but we know where the vein is, and there's not much before that. So we're going to start with a combi rig, which does RC and core. So instead of drilling 20 or 30 meters a day with a core rig to go 200 meters to drill an 8-meter section of core, we're going to take that 200 meters, do it in 3 days with an RC rig, change over to a core rig and core the vein. So we can amplify and put our drilling, one, cheaper, but two, on steroids at a quicker pace compared to what anybody else can in country. And that is that's one of our key targets. We've actually got the rig targeted. That rig's looking to be purchased soon by a contractor. It'll be brought in country, and that's going to start. So we can do that drilling at a rate that no one else in country can.
Sometimes you got to have money to make money, don't you?
But it is, and it's so true. Instead of, this is what the locals can do, that's where we better go there because that's going to save us money. No, you spend a little bit up front, especially on some of these things. Yeah, you can turn over 20,000 meters in 6 months versus 20,000 meters in 2 years. It makes a big difference to how quickly you can do that drilling and move that forward.
Talk to me about I know you talked about some of the senior management positions that you're filling and bringing into country in terms of local workforce and I guess operational management on the ground. Is there a resource to choose from? Is there enough people there? Are they skilled enough?
Definitely enough people. Is it all skilled? No, a lot of it's unskilled labour and will have to be trained. So our target's twofold. We basically got a transformation project. The amount of, let's call it non-Latina expats we're targeting is like 4. And then we've got a raft of about 30 Latin expats. Okay, and there's a transformation over the first 2 years to train locals into those supervisory technical positions so that they can all be replaced. Those guys have got 2-year contracts to replace themselves over 2 years. Below that level, there's some skill, like driving a truck. You do have to be trained, but if you've got a license, you can be trained to drive a truck, and those type of things. Like in Runruno, every operator we have was trained by us and our local. Those type of skill sets we have, we understand how that works. We've got all the procedural documentation in place to make that happen. So we'll end up with the same type of workforce we have here. We'll have about 3% to 5% expats, 95% will be local, and 80% of that will be local. If you get my drift, they'll be from the surrounding area of the mine.
Right, and I just want to come back to the money equation because people got used to you throwing off cash and free cash flow at that. From Runruno, obviously there's this integration and scale up for in Nicaragua with India. When do you expect the kind of it to be cash flowing? You've got the plant, so is it fairly quick?
Yeah, very, very quickly. We will have a stockpile ready to go. We're hoping the commissioning phase, given that the back end of the plant is very simple, it will really be around commissioning the mills and making sure the mills function effectively. That's where the main commissioning is going to be. And so the plan is, when we talk about Q4 2026, that is fully producing. That's commercial operation, not commissioning starting, is our target. So we're looking to be spinning off cash for about 3 months with 2 operations before Runruno runs down, and then the second operation will start funding the transformation of Runruno for the new ore body that we're hoping is going to be Dupax, which is going to be a VMS. It's going to be a concentrate production, so we're going to produce concentrates from Runruno rather than doré, and that's the focus at the moment. So by 2028, 2 operating mines. And just if the numbers we're seeing coming out of Dupax at the moment are anything like what we're seeing, we're going to be doing about 4 times the revenue, 3 to 4 times the revenue out of Dupax as we were out of Runruno. for the same type of production. So it is significantly greater, and like I said, if that ore body holds water, then we're going to be two producing mines probably doing in the range of 400 to 500 million free cash a year. That's where we want to be by 2028, 29. We will at least be doing 180 out of Nicaragua, because if you look at the economics on 145,000 ounces a year, that's doing 1,000 to 1,100 all-in sustaining costs. You can run the number yourself. You know, the free cash out of that is very cash generative, even more so than what we are here. And we put on top of that a revenue stream coming out of Runruno by 2028 that's 3 times what we're currently doing. That is our focus. That's where we want to be.